Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, October 17th. We had a gap up and run most of the day yesterday. Lower than usual volume, especially if you want to see something that markets gap up and just kind of grinded higher all day. Very, very quiet session, though. If you're not in front of the computers and you're not in front of the screens all day, it would basically say, why would that be? But no volatility at all whatsoever. Markets jumped up, slight pullback, and just kind of grinded higher, consolidated around lunchtime, and then again pushed up higher into the close. Normal price action, but usually we talk about it's what we call one of these runaway gaps. A lot of it was basically from Europe. Big, strong performance in the overnight session in Europe helped propel a lot of the global stocks higher. Euro also rallying on top of the short-term consolidation pattern, well up now above its 200-day moving average, along with the euro being strong and the dollar falling or at least consolidating, not moving anywhere, gave a boost to stocks yesterday. And pretty amazing because we had early on we had Citibank with Vin Pandit leaving abruptly. Nobody knew what was going on, so some of the stocks actually started rolling over a little bit. We had Merkel talking about the Spain bailout, negatively anyway. So we had a little bit of dip, and after that, market shook it off and then rallied. So, again, good news is good news. Bad news is good news. Markets are in this little euphoria at the moment. And like I said, anything can change at any given moment. When I see a lot of these inversely correlated stocks and sectors, and I see a lot of these indicators doing one thing where stocks are doing another, I personally use a word of caution, and I still trade the trend, but I'm not looking to go out and just blindly buy stocks here, especially at these levels. Now, markets could go much higher, but for me, I like to play a little bit safe to the hip until everything kind of starts to be in sync with one another, and then we can actually get very aggressive here, and that time will come. Right now, it's just markets are up at these lofty levels, and they can go higher, no question about it. I've been saying that for weeks and weeks on end, but just trading the best setups, getting a good day in is really what I'm looking for right now. Now, we have earnings seasons, and we have a lot of responses to the third quarter, so a lot of them that were released yesterday, some of them were good, but and I just want to go over just a couple of them, and it's really kind of scary if you really come down and think about it and why the market really didn't even care, especially last night after the close. We did have State Street gain about 2%. Johnson & Johnson came in at 1.4%, improving. So we had some good, some decent numbers coming out of some of these major companies. But then we had Goldman Sachs come out, and they missed. They missed it, and they were down 1.3%. United Healthcare slipped 0.6%. And then after the close, which was really kind of scary, and I cannot believe the futures did not move any lower, had a little dip. IBM literally plunged 3.5%. Intel dropped 2.2%. Linear Technologies fell 4%. Apollo 7%. And then we had, of course, Intuit Surgical, a big surgical company, down 4.8%. And no sign whatsoever of any kind of pullback sell-off in the futures. And then we had Spain. Their debt was basically status quo, and that's what pushed the euro even higher after the bell. So everybody was looking at what Spain was doing, and all eyes were not on really what the health of our companies are. So it's a really scary situation, really come down and think about it. But nonetheless, the next couple of days, we're going to have some real big earnings in some of these bigger companies, and we're going to see if the market really cares. And at the moment, they really don't care. And I remember 2 years ago when Intel reported, and we had that large head and shoulders pattern, and Intel sparked a major rally because they beat numbers. And now, IBM came out and reported, and nothing happened. Nobody could care less. Now, that could change today, but highly unlikely. Futures are down basically, they're basically flat at the moment, and euros are at its highs. So it looks like to me that, again, good news is good news and bad news is good news. So until that happens, short-term trend continues to be up, and we'll just have to see how and when these market participants, bigger fund managers are going to react to a lot of these news and what's happening here in the in our companies, because they're not doing really well. They're actually losing. They're reporting slightly higher earnings, but their revenues are lower. So it's just really weird to me. That's a big red flag. All right, let's get into the charts, and I wanted to show you a few things here, and we're going to go back to our culprits, but I wanted to show you copper. As you can see, now we had a big move in the markets. Copper didn't do anything, and it just kind of stuck in its consolidation range. Not that it's a bad thing, but copper is right here at this 385, 370 range. After that big move out of the symmetrical triangle, bull flag popped out of it, and then just basically sold back off again. So I'd like to see copper move with what's happening with the market, especially yesterday, no less. Overnight session here, we had we had the Shanghai again, oversold bounce, rolling back over again with our ratio chart here, and we're already overbought in our stochastic, so really not doing much. If you want to call it a little flag, sure, we could get a flag, but we really need to get it back above the 2200 here, really start chopping around up at these upper levels to break above the 200-day moving average to go higher. And I'd like to see China start moving, and then we can get some really big moves in some of these commodity stocks. Now, our trusty NYMO, plenty of room to the upside to be overbought, guys. We are a little bit overbought in the short term, but that does not mean that we can't move higher. So as you can see here now, we're +5. Plenty of room to move up higher into these overbought levels. So just a little word just to show you where we are here with that. And the VIX. VIX here, little inverse head and shoulders here. I showed this going back at least a month or so. Downtrend line here, still in this downtrend line. So we're again, just chopping around here. No volatility, extreme complacency. And that's where one of my other red flags are. When everybody doesn't care about any kind of fear, have to be really cautious about this. All right, so let's go into our charts. S&P Cash daily chart. We had our big uptrend channel here. We did break out of it briefly, and we rolled back. Now remember, I said we had either a head and shoulders or a symmetrical triangle and or a double top. So we have a bunch of these little areas here, and I just took everything off here just to kind of clean up the chart a little bit. 50-day moving average coincide pretty nicely here with this lower downtrend line. And let's call it a double top up here for now. So let's see, we got plenty of room to run up into the 1475. And even here, if you really take this and extend this back up higher here, you can really get easily up into this 1500 range. And to me, I think that's definitely attainable by year end. I'd like to see a little bit more of a deeper correction than just a 4-day pullback, less than 2%. That's really doesn't entice me to go all in long here with stocks. Spiders daily, like to show you what volume. Now, despite the 2 big day moves, look at the volume here, because I like to analyze volume, and if you could see here, look at what we have. Volume is anemic. I mean, we had a huge day yesterday, which really wasn't that huge. If you come down and the numbers, the Dow was up triple digits, but if you look at it, we're really. I want to see volume break out higher. I want to see days like this. This is where I want to see. And we really didn't have any. We had 2 days up, and volume was basically the same, below average. Scares me. It does scare me. But again, you can't fight price. Price is what pays us. And let's take a look at a 15-minute chart. And I showed you the volume profiles here in this 15-minute. Small little bullish falling wedge pattern. We did break out here on Monday. Tuesday we had a big little follow through, and again just chopping around back in these upper end of the ranges here. So big channel from the 143 to the 147. Again, a break below this 143, guys. Look out below. We have no volume here. Volume profiles are really light. You got next area of resistance would be around 139 in the spiders. So keep an eye on that. All right, we mentioned bonds. Remember we said break out of this channel. We're at resistance. And the Dow, if you recall, several days ago, I said Dow was at support, and we had bonds at resistance here. Look for one way or the other a pullback into in bonds, and then of course a breakout in the Dow. And I'll show you that chart. Sure enough, that's exactly what happened. We had a false breakout. Usually, when you have something like this, you usually get that false breakout and pullback, and then now we'll see where the pullback ends. If it's we had low volume here in these bonds, so if the bonds can hold above the 200 and then really start to break a higher, then I say we have a little bit of momentum to the downside. And here's the Dow chart. If you remember, if you recall, I said, guys, we're at support here. There's a long-term uptrend channel here dating back below, this is June 4th, where we started a little bit of a rally, and then we're actually back up into this area again. And again, we can easily get back up into this 138, 140 area in the diamonds, which is the ETF of the Dow Jones. So keep an eye on this. But as you can see, technical analysis does work many of the times, if you keep following the same analysis. So we had our support on the Dow, we had our resistance in the TLT, the bonds, and sure enough, it worked out perfectly. Now, XLF, I want to show you the banks because the banks here were really acting terrible yesterday. They really did not act well, partly because of the CEO leaving Citibank and then had to be clarified a little bit. But they just weren't. They're not doing well. Wells Fargo reported last week, if you remember, didn't do well. Yes, J.P. Morgan beat, and then Goldman as well didn't do too well. And here's where we are, right? We have this large triangle, lower trend line here, matching the 50-day moving average quite nicely here, and we're just kind of hovering around. We'll put it in a little bit of a doji star. Drop it down to a 60-minute, and you can see where we are here. Nice symmetrical triangle. So when it doesn't give me any ideas on the daily chart, I kind of drop it down to a 60-minute where I could find some here. So we even have like an A, B, C, D, and now we're looking for a pullback into E here, right? I don't have it labeled, but you could clearly tell A, B, C, D, and now E looking for that pullback. So watch the banks here. The banks really, I would have thought they would have had a better day yesterday, and they did not. So keep an eye on the banks. Transportation sector here, nice big consolidation area off this bullish falling wedge, sloppy bullish falling wedge, and then we had this bounce. Now we took the 20 to 50. Now we're looking at this 200-day moving average. To me, I just think an oversold bounce here. I'd like to see us really get below this above this channel to really get going. Then I'd say, hey, we got something really big here. We can have a nice big runaway market here to the upside. But until a lot of these other indicators and sectors really start lining up with the S&P and the Dow, I just think that we just have an isolated incident basically, and money rotating out of tech obviously. IWM's Russell. Again, we had 2 days up. Look, we had lesser volume yesterday than we did on Monday, and we were up 2 days. And as you can see here, this is not a big rally, and all the rally is at the moment is the Dow and the S&P, and that's not really what we want to lead the market higher. Okay, and SMHs, yes, big day, oversold bounce, due for a big bounce, and sure enough, we did get it. But take a look at Apple, and I have this notation here. I'm going to keep this here for now. We literally took this trend line. We've been hitting this for the last 4 days. If we lose it, then we're looking at easy 620. If we lose this 620, we're looking for a 588 target. Now, of course, guys, that might not happen, but we do have some overhead resistance here. The 20 and the 50 starting to cross mark over here, and the 20 rolling over. I don't like to see that. So just a word of caution: if you are long Apple, tighten up your stops. If you are looking to get short Apple here, I would wait to see where we can get a next reversal day on a closing basis before we look to get short Apple. And I don't think I would be looking to get long Apple here with a big engulfing candle. Right now, to me, there's not a trade here in Apple for me anyway. Okay, last but not least, our Qs, and you can see big back test here. So what we have, recap, we have technology, money coming out of tech, and a lot of these other companies rolling into a lot of the brick and mortar stocks. Dow's up, and to me that still calls for a little safety haven. Russell not really performing as well as it should, the way the markets are up yesterday. So just use a word of caution. Again, don't fight the trend. I would not be short. I'd be looking to buy pullbacks in this market until we get some sort of evidence, hey, the market is topping. We had 3 small days lower on no volume. That was a bullish sign, but let's see what happens in the coming days. Earnings is upon us, and earnings really hasn't been a factor. We still continue to move higher on lesser than great earnings, believe it or not. So let's see what happens. Maybe the market starts to realize what's happening here, and then we'll take it from there. All right, guys, have a great day today. Be safe out there, and we'll talk to you tomorrow. Take care.